everyone, welcome to Mark's Finance and Fitness. Today you'll notice my hair is a little messy. I had a workout about an hour ago. This is also a fitness channel, so feel free to watch my fitness videos. I did one recently on a really fun move. I think it'd be fun for you to watch. So if that's your cup of tea, I make those videos as well. Today's going to be finance though. I recently did a video on the technology sector. Today I'm going to focus on the material sector. I held one ETF and one stock in this sector that we will go over shortly. But I'd like to tell you guys, a few videos ago, I mentioned that my goal for September was to make at least $100 in dividends, and so I want to reveal what I made. So we'll do a countdown in 3, 2, 1. I made $111.72. That makes me happy. That has been my goal this year, is to reach over $100. And you know what dividend investing is to me, and why I like it, is that it creates passive income. You're making money while you sleep, while you eat, while you work out, and you're creating more freedom for yourself. You're reducing your dependency on income from one job, which most people depend on, is just one job and one source of income. This is creating a second source of income for myself, and it's just a great thing to have. And I believe if you invest in quality companies that pay dividends, that increase those dividends yearly, you're really doing yourself justice. Now, I say be careful though. Some people chase those dividend yields that are really high. That typically doesn't really work out for people. They call them dividend yield traps because you're getting these really high dividends, but the stock is either flat or goes down. That's because that company at that point is desperate to get investors, so they're going to flash you a high dividend. So quality companies that pay dividends, that increase them yearly, are what I invest in, and I'm excited that I am making passive income that has now reached over $100 this month. Now that's not my average, of course, but it was my goal for September because that's when most of my dividends are paid. And so with that said, I would like to dive into the materials sector. Now the materials sector is it includes companies engaged in the discovery, development, and processing of raw materials, which are used across a broad range of sectors and industries. So I almost think of it as the foundation for the whole stock market in a way, right? Because everything kind of comes from raw materials. And now the materials stocks include manufacturers of products, and it covers things like plastics, fertilizers, paper, concrete, metals. And so the company that I will reveal to you is in that kind of section. It's a manufacturer of products. And so the materials sector is one that I really think, as I said, that is the foundation of the stock market. And so before I go into the individual stock, I chose an ETF that I think has a lot of potential because it is kind of that foundation. And ETFs, there's nothing wrong with them. Some people think if you're not investing in individual companies, then you don't know what you're doing and you're just putting your money into an ETF. But ETFs, especially good rated ETFs that are very diversified, usually do better than people who pick individual stocks. So I don't think there's anything wrong with that, and I like investing in ETFs myself. So the material sector ETF that I invest in is called FMAT. Now, I'm sorry if your name is Matt, I am not cussing you out, but it's literally FMAT, F-M-A-T. And FMAT invests in companies in the material sector, of course, and it has a very low expense ratio of 0.08. Now, this is a Fidelity ETF, so you might have to have Fidelity to purchase it, but I think I've seen it in Robinhood and other brokers as well. Now, FMAT is rated as the number 2 ETF in natural resources, so it has a very good, healthy rating, and it's got very good diversity, and so I really like this ETF. Now, their top 10 companies in this ETF are here, and they range from Sherwin-Williams, which I really like, all the way down to international flavors and fragrances. Now, one of the stocks in here is the individual stock that I invest in, and that is DuPont. I'm not going to try to say the rest of that name because I botch it every time, but DuPont is the stock that I invest in. So this is my ETF. Now we'll dive into DuPont. Now, DuPont, I really like this company. I think that it might you can make some arguments that there are other better companies in the material sector, but I really do like this company. And this company, it has had some mergers and some spin-offs, and those mainly happened in 2017. So since then, it's kind of acted as this kind of new company. But this company focuses mainly on three sections. So electronics and industrial, mobility and materials, water and protection. And so, this company has a lot of brands, such as Kevlar and Tyvek. Now, Kevlar is a lot of people have heard of. It's a very strong but yet lightweight material. And then Tyvek is a material that has really been helpful in the medical sector, so keeping people safe. But if you look here at this picture, all those letters below that are darkened in black are other brand names. They have sections in each letter, so they have many, many brands. And then they also will go into, all the products that they hold. So here's just a few. This goes down as well, further and further, but they have adhesives, advanced printing solutions, clean technologies, construction materials, consumer products, electronic solutions, fibers, fabrics, and nonwovens, home, garden, and car care. So this company, to me, is very diverse, has a very good moat, and I think this is an innovative company. As I went through their website, they are really focused on innovation, which I like because that's the future. And what I want to invest in is the future. And the past is, you can learn a lot from it, but the future is what you focus on when you invest in stocks. And I think this company has a very good and healthy future ahead of it. And so DuPont, if we look at their stock chart, this is the last 5 years, so they did have a decline there for a while, and we'll go over their second quarter 2021 results, but their second quarter 2020 results, they had negative earnings. Where now, in this last quarter, they had positive earnings, so they really turned it around. I think they were up by 26%, and their future looks bright. Now, why does their future look bright? It's mainly because they have a focus on the semiconductor division, and that is a very wanted area nowadays, is semiconductors. And so that is their really big boost in their earnings. It's really helping, but they also have other areas that are helping boost their earnings. They provide products for the 5G smartphones, data collection, processing, and storage, as well as the autonomous and electric vehicles. That is huge, right? That's the future, and they have a big, healthy part in that. So all these tell me that their innovation and their focus on these areas are going to help them take their future into a positive growth, projections. And so that's what I really like about this company and why I chose to invest in it. I think they're very diverse, they're very innovative, and they have a very good moat. Now, their price target from analysts range from a low of $74 to a high of $102. Now, right now, I think they closed at $70.42. So it's, just up from here, according to analysts. Their PE ratio is 7, which is pretty low. They do pay a dividend yield of 1.7%, so I love that this company is a dividend-paying company. And so, this kind of shows you where analysts are at. Now, I think they range from a strong buy all the way down to a hold, but there's no analyst that puts the stock at a sell. And so that should tell you something as well. Now, this stock, as I mentioned, if you go to their website, they have an investors section just for investors. So it talks about, earnings and stuff. So if we go to their second quarter results, they mention how, their net sales of 4.1 billion are up 26% from last year. And then I like this. Approximately 800 million of capital was returned to shareholders during the quarter through share repurchases and dividends. I love when a company repurchases their stocks. and then they also distribute that to shareholders through dividends. This is a great sign. This is what I really like about this company as well, is they're investing back into their company and their shareholders. And so this company, I've looked at a few different sites to kind of projections, and most projections say that this company is expected to keep growing in its financials. In the last 4 quarters, they have beat estimates, the earnings per shares, by an average of 12.1%. So that's also a great sign. This company has seemed to be turning things around. And I think due to the semiconductors and the 5G and the autonomous and electric vehicles, that they have parts in those, are really going to help this company be boosted in the future. And so all around, this is why I am investing in this company. They're very diverse. They have a lot of brands and products. They have brands and products in sectors that are really needed right now. And I feel they have just a big moat. So how has DD performed in my portfolio? Well, let's take a look. Very well, actually. I am up 38.68%. Now, I don't have a whole lot invested, but I am going to be investing more in this company, especially since it is in the low 70s right now. I'm going to buy, and especially if they dip down to the 60s, I will buy a lot more. But this company has really done well for me. And so that's where I think I'm at with DuPont, is I'll buy some more shares in the low 70s. And if they dip to the, into the 60s, because who knows what this market's going to do with inflation and things like that, I will add a lot more at that point. So DuPont has done well for me. Now let's look at FMAT, the ETF. This one I have more money in, and I've added to more, so that's going to lower my average, right? So this one has a growth of 10.27%, but just keep in mind I have added to it, which is going to bring down that average. But this is one that I will regularly invest in because, as I said, the material sector I feel is like the foundation of the stock market, right? The raw materials are used for almost every sector. So this is why I like the material sector. This is why I chose an ETF, because it just gives you that, diversity in companies, and they kind of manage it for you. But I really chose DuPont from everything we explained. Their innovation. They also have a lot of great awards. They seem like a great company to work for. And then, of course, they're just really needed in a few areas as well. So DuPont, long term, well, let's say this. In the next 1 to 2 years, I think this company will have good growth. Beyond that, I'm not sure. We'll have to look as we get closer. But I am willing to put money in the low 70s. And if it dips below that, of course, I'll put in a lot more. So this is the material sector. This is what I invested in, the ETF and DuPont. And I'd like to hear what you guys have invested in the material sector, or if you even are invested. A lot of people don't focus on the material sector because it's not, the happening sector, like the tech sector or the financial sector. So I think this is a very sturdy sector to be in. And I think there's a few companies that will stand out and grow a lot. I like Sherwin-Williams as well, and I might get into that eventually. I was going to get into it, never did. Wish I did, though. If you look at their history, they've done very well. So DuPont is one that I like. The ETF, though, is there because I haven't done a lot of research in the other companies, and I'd rather just put in an ETF and focus in some other sectors where I am more knowledgeable in, if that makes sense. So with that said, I'd like to hear any feedback you have on this video. I appreciate your viewership, if you subscribe, I really appreciate that. Like this video, and next time we'll see what I do on the financial side of things, but I'll be also incorporating more fitness videos as well if you guys, have that in your background that you want to look into as well. I think financial and fitness are both areas where we need to really focus on our health financially and our health in the fitness sector, or in the fitness realm as well. I got sector on the brain. So anyways, thank you for watching. We'll see you next time on Mark's Finance and Fitness. Have a great day.